what you see here in the picture is just the heart of our project. You can see a mill. There's a Highway 37 coming through. Just maybe a small fraction of our 600 square kilometer land package. We've been exploring this project, but now we are in an inflection point given our exploration success and the gold price as well that allow us to advance the project in a unique way. And hence the tone on the title here, which is Path to NPV, Path to Cash Flow. I will be making forward-looking statements, so do take a note of that as well. So what you see here on your slide is providing the context for what we're doing and what we have so far. So these are the 5 key pillars that makes us unique. So if you're start on a pillar on the left, it is the people. So we have a team that has discovered, permitted, built, operated, and sold billion-dollar gold projects, has defined tens of millions of ounces, and raised capital and built mines worth billions and billions of dollars. So we do have the skill set, and we do have a mindset for something big. The second pillar is the infrastructure. So we have a massive infrastructure advantage because we have a brownfield project with 5 past producing mines. So we have a paved highway bisecting our property, a paved road straight to our deposit. We have power, we have water, we have a fully owned and permitted mill, 160 kilometers of access roads. We have 25 kilometers of underground workings for our higher grade veins in the south as well. And the replacement value of the infrastructure alone is worth multiple times our market cap. So that just really highlights how undervalued we are. In the last few years, we've been growing our resource very, very successfully. We have now a combined resource of 2.3 million ounces at just over a gram per ton, starting at surface, occupying just over 1 square kilometer of 600 square kilometer land package. So there's a lot of prospectivity, a lot of exploration upside. The deposit is only constrained by drilling, with 90% of the ounces occurring within 150 meters from surface. Other than that, we also have a very expedited path through production. We are in a safe jurisdiction. It's becoming more and more relevant, including today as well. We do have mine permits already in place, which is extremely valuable, especially in British Columbia. We have full indigenous community support as well. And we have a very unique optionality. So we have our bulk tonnage deposit where we have the entirety of the resource. Our objective is to get it to 5 million ounces. We see that as a 5-year development timeline. We do have potential for a lot more than that, but we also have these high-grade underground vein systems running between 10 and 20 grams per ton that provide us a much more expedited path to cash flow. And that's something that I'm going to try to highlight over the next few minutes as well. Our market cap right now is just over 60 million, so it's slightly higher. The stock is moving. I think people are starting to wake up to what we have as we also expand our focus going forward as well. In terms of how undervalued we are, we've seen a few slides like this. We have, with 2.3 million ounces, an enterprise value, which is extremely low, with grades that are very comparable to a lot of Canadian projects that you see here. You see the numbers that you see there on next to the bars are the grades of the different projects. We compare quite well with most of them. The ones on the right are more aspirational. So we have a massive re-rating opportunity just on what we have, let alone as we advance the project and get closer to our aspiration, which is going ultimately to production. In terms of the team, I won't dwell too much in all the accolades, but we have people that have built projects, developed projects, discovered projects, permit projects across Canada, billion-dollar projects. Steve Levin with IAMGOLD, Steve Robertson with the Red Chris mine, Chris Stewart, James Maxwell, tens of millions of ounces that have been defined collectively by this team. We really have the skill set, and it is very important, especially in this sector, to have this kind of experience as we advance going forward as well. So just to zoom into our project in northern BC, just to give you a sense of what we have. We have a truly jurisdictional land package, 60,000 hectares, 600 square kilometers, 100% owned, roughly 27 by 25 kilometers contiguous land package. We're just a couple of 100 kilometers north of the Red Chris mine, which is majority owned by Newmont, along Highway 37, which you see there bisecting our property. We use the highway to separate the 2 key project areas. North of the highway, the Cassiar North project area, Cassiar South is Cassiar South project area south of the highway. It's almost like we have two distinct projects together, contiguous to each other. So the north is prospective mostly for bulk tonnage targets similar to the Taurus deposit, 1 gram to 1.5 grams starting from surface. With again, where we see the big value on the project, the ultimate value creation to be able to eventually define a 200, 300,000 ounce plus producer there. The south is where we have a more expedited path to cash flow in these high grade veins as well, 10 to 20 grams per ton. We have 4 past producing underground veins in the south. We have a fully owned and permitted mill. We have 25 kilometers of underground workings connecting the surface to the end mine sections of the high-grade veins. And we've extended all the past producing high-grade veins as well. There's a lot of potential there as well, and something we're going to be expanding our focus this year as well. Other than that, we have mine permits, extremely valuable to have in Canada in general, as well as in BC. So we have a mine permit covering most of the Taurus deposit in the north, and a mine permit covering the Cassiar South or Table Mountain past producing veins in the south as well, that provide us a very expedited path to production as well. You can see our resource here, the Taurus deposit, where we have the entirety of the inventory. This is on the bulk tonnage side of things. The combined resource is 2.34 million ounces at just 1.01 grams per ton. That's using a cutoff grade of 0.4. If you lower that cutoff grade to 0.3, the combined resource goes up to 2.6 million ounces. The resource is only constrained by drilling. It's open laterally, it's open at depth. We don't know how big it's gonna get, but it's very, very close to surface. Just 10 meters of soil overburden on top. Deepest point of the pit is 307 meters, but 91% of the ounces are within 150 meters from surface. So as I mentioned, we don't know how big Taurus is gonna get, but we're expanding it. And it's not just the immediate areas around Taurus. We have outlying targets that are 2, 3, 4, 5 kilometers away from Taurus with similar style of veining, similar alteration, similar mineralization. And any of these targets could be another Taurus. They could be connected to Taurus. So that really highlights the prospectivity of this district. That's highlighted by gold at surface that we see in grab samples with grades that are consistent to the Taurus deposits. We've also been drilling some of these targets. We've been stepping out. We've released some drill results in December. We did 30 to 110 meter step outs from Taurus. We've released 9 drill holes there. They all mineralized. The highlight there was just over 13 grams at 13 meters at 13 grams per ton, below 30 meters from surface, or very shallow. We also drill 11 drill holes at the New Coast target, which is 2 kilometers south of Taurus. All of them mineralized as well. We see widths and grades similar to Taurus, and we believe that New Coast alone could have the potential of another Taurus, let alone all the outlying targets around it. Other than that, I mentioned the high-grade veins. You can see some of the infrastructure we have here, 17 historical portals, 25 kilometers of underground development already in place, connecting the surface to the end mine sections of the high-grade veins, a fully owned and permitted mill, specifically well-designed for the high-grade material. We know that historically these veins were running between 10 and 20 grams per ton. So with that, in a hypothetical mining scenario, 300 tons per day mill, if you're putting 20 grams per ton, that's a 60,000 ounce production profile. If you're putting 10 grams per ton on the mill, that's 3,000 ounce a year profile. So that's kind of the potential that we see here as we evaluate bootstrapping scenarios going forward as well. You can see some of the historical production here on the table on the left from the Cassiar South high-grade veins. Over 300,000 ounces produced, again, between 10 and over 20 grams per ton as well. We've extended all of these veins. All of these veins remain open. So there's a lot of potential there. Just for example, the main mine produced 150,000 ounces historically. And the periodicity suggests that every 400 to 600 meters, there's a potential for a parallel vein system. And we have 9 kilometer strike length so far that can host dozens of these veins. So there's a very big opportunity as we're looking to drill here and bootstrap this part of the property to production. So just to recap a little bit what we have a substantial resource with a lot of exploration, expansion potential. We have infrastructure and permits in a safe jurisdiction. We have a very experienced team that has done this before. We have community support. We operate by high environmental standards as it's a norm in Canada. We have a very attractive valuation with a massive re-rating potential. As we go into an inflection point, to bootstrap and evaluate the opportunity to bootstrap this to production, evaluate the direct ship ore opportunities as well. We believe that we have the potential to permit the high grade into production in less than 2 years. The direct ship ore opportunities we're evaluating right now could also get us to cash flow in less time than that. And we have the ultimate potential, which is really the bulk tonnage, where we see the potential for a 300,000 ounce a year production profile, potentially more, with a 5-year development timeline that we see there. So in just terms of catalysts, we have met studies in PEA for Taurus coming next month and at the end of June as well. We're looking to drill 10 to 20,000 meters this year, potentially more, subject to capital. We're receiving a lot of strategic interest right now as well. We have a lot of interesting ideas and discussions and approaches like we've never seen before. Now I think now is the time to have a look at the company if you haven't already. For all those shareholders that we have here, do consider the opportunity to increase your exposure as we go into this inflection point. For those that don't know our story, please come and check us out, talk to us. This is a very exciting opportunity. The interest is just getting to our stage of companies as well. So do your due diligence, and thank you so much for your time.